Hey, what's up everyone? Welcome back. In today's video, we're going to take a look at Onyxcoin. Onyxcoin is up 110% in the last 24 hours. We're seeing price kind of skyrocket and break out, but we are going to take a look at the charts here to see if the price is going to pull back and correct itself or if this bullish momentum is going to continue. So let's dive right in. So before we take a look at the daily and the immediate short term for 4 hours, we're going to take a look at CoinMarketCap here for some fundamentals. So price right now is trading at 0.02023. We are up 12% so far for the day. And this here, the volume 193 million. So at 110%, we are up. Circulating supply is almost close to the max supply here at 32 billion and max supply is at 48 billion. So we're gaining a lot of traction, a lot of attention here for Onyxcoin, and it is just going to open up even further opportunities. So quickly looking at the daily time frame. So as we were talking in our last video, we were anticipating that the price was going to come down to an area of support. It found nice support here from our volume profile that we did use to find some volume clusters around 0.01707. So this is an area here where buyers have consistently stepped in, and this level has held up very nicely. And now we're seeing a push towards our 38% of our Fibonacci, or more importantly, the resistance or the support line that we used in our falling wedge chart pattern is now becoming an area of resistance. So as the price broke on February 19th, came down, and now it's retesting this area of resistance. This is ultimately the test here for Onyxcoin. If the price can come back up and break above this area of resistance, we can possibly see the price come up at 0.02588, which is the 50% of our Fibonacci level. It is common when a price breaks down through an area of support, especially with chart patterns, that it gravitates closer and retests that support, now turned into resistance, and then get rejected. So we do want to see the downside of it. If we do see a rejection closer to this area of resistance and at our 38% of our Fibonacci at 0.02028, then we could possibly see an extension coming down and retesting this area of support. We're going to shift over to the 4-hour time frame because this here is what gets a little bit more interesting. So zooming into the 4-hour time frame here, we can see that the price itself is struggling to reclaim the 50 moving average. As the price is coming up, retesting, we're seeing a lot of buying pressure here, a lot of buying action with these higher wick extensions. So we can see that at a period of these 4-hour sessions, the price itself pushed as high as 0.020. However, a lot of selling pressure pushed back the candlestick around this area. So we do see and anticipate that there's a lot of buying pressure going into 1, 2, and 3 of these 4-hour time frames. Now coming up to this next candlestick, we are at an area of resistance. We've got 2 levels of resistance here. Our 38% of our Fibonacci at 0.020 and our 50 moving average. We do ultimately need a lot of buying pressure to reclaim this 50 moving average and push even higher at the outskirts here, but I'm just afraid if the buying pressure has been overly exhausted in the last couple of sessions. If we do end up with a spinning top candlestick, is what is displayed on the chart right now as we're filming, it does show a lot of indecisiveness in terms of the bulls and the bears here. So we may see a temporary pullback, especially like if we saw here, we see this high wick candlestick, we see over exhaustion of the buyers. Next candlestick session was a spinning top candlestick, price slowly pulled off. Now, in some cases, there are cases where we do see a spinning top candlestick followed by a bullish green candlestick. And that's only because in that session, the buyers decided, or the majority of buyer interest really pushed the price even further. So I'm not just saying that even though we see a spinning top candlestick, that the price is going to come down. Just anticipate if price does come down, it will be followed by a red candlestick as seen as the previous session. So if we do see a possible pullback going into these 2 areas of resistance, we are just going to pull out another Fibonacci at this level here to see if there is any types of scenarios or in areas of confluence. And again, here we see a lot of areas of attention around that 38% of our Fibonacci, but most importantly, we can see around here, our 38% of our Fibonacci level had held very nicely for an area of support. So if we do get rejected around 0.020, we might come down to 0.019 until a further continuation may continue. If we're taking a look at more of a bullish aspect, and let's say that the volume continues to push even further and we don't lay into a spinning top candlestick, or if we see even any other bullish candlesticks, then most likely price is going to come up and retest the next area of our Fibonacci at 0.02098. We may see some struggle and struggle around this area because price is moving fairly quickly here. Price naturally needs to come down for a correction because people are taking long positions at this moment. So that's kind of our video here. I do want to just kind of, say just tread cautiously. The price for me itself on the daily time frame, unless we reclaim some of our moving averages to really change the marketplace from that bear market to a bull market, we could possibly see some natural pullback. So just be very cautious here, even though on the weekly time frame it is still a bull market overall, because the price is above our 20 and our 50 moving average. If we take a look on the daily time frame, we do ideally need to claim the 20 here to really kind of shake it down. But kind of let me know what you guys think down below. Thanks so much for tuning in with me today. Like and subscribe as well, but I'll see you guys tomorrow. Bye.